Today, Bitcoin rises above the $65,000 level for the first time since August. Gary Gensler talks crypto regulation on CNBC airwaves. And Andy Baehr of CoinDesk Indices makes sense of Bitcoin's recent run-up. Welcome to CNBC's Crypto World. I'm Brendan Gomez. Digital currencies getting another boost this morning. By noon Eastern, Bitcoin jumped above $65,000, while Ether rose to $26.52 and Solana climbed to $157. Okay, let's talk about the top stories for today. SEC Chair Gary Gensler joined Squawk Box this morning and talked crypto rulemaking. When asked about the agency's regulation by enforcement approach, he emphasized that the SEC is also a law enforcement agency.
We oversee the markets. We approve all those registrations when people go public and so forth. But we also, about 700 plus times a year, bring actions. We have to go in front of a judge and sometimes juries. So now it brings it back to this new innovation. And what Satoshi Nakamoto did, we're almost at October, so it's almost the 16th anniversary, 16th birthday of Bitcoin.
Right.
And it's an innovation. But innovations don't long thrive if they don't also build trust.
Gensler, who was nominated by President Biden, has been widely criticized for his perceived hostile approach on crypto. When asked about both presidential candidates Trump and Harris's statements on the industry and how that would affect the SEC's work, he said that innovation and investor protections are complementary.
On the policies, I think it's quite clear that investor protection helps build innovation. Innovation is compatible with investor or consumer protection if it's about automobiles or cribs or anything else. I think they complement each other. And I said this when I was teaching back at MIT. I said, this field will not long survive if you can't build that investor trust in the markets.
He also stood firm on his stance that clear rules do exist for the industry. Earlier this week, Gensler and other SEC commissioners joined a House Financial Services Committee hearing and was grilled by numerous lawmakers who argued the need for more regulatory clarity. Gensler was sometimes at odds with fellow commissioners. During questioning from the Republican Congressman Andy Baehr of Kentucky, Commissioner Hester Peirce admitted that a lack of clarity is not conducive to investor protection, while Chair Gensler has often pointed to the Howey test as a clear framework. Next, the U.S. is cracking down on alleged illicit Russian crypto exchanges. The Office of Foreign Assets Control, or OFAC, is sanctioning Sergei Ivanov of Russia and crypto exchange Cryptex. That's according to FinCEN, which also says it identified another exchange, PM2BTC, as a concern for money laundering in connection with Russian illicit finance. The U.S. Department of State is offering a $10 million reward for information leading to the arrest or conviction of Ivanov. Earlier this year, the country approved a new law that permits crypto transactions for cross-border payments as it's been facing financial pressure from Western-imposed sanctions. All right, let's get back to the market for our main story. Crypto World's Jordan Smith spoke with Andy Baehr of CoinDesk Indices to learn more about Bitcoin's recent rally and how the current macroeconomic environment could be a boost to crypto.
All right, Andy, thank you so much for being here. Let's start with your reaction to Bitcoin's price moves in the last few days, especially in the past 24 hours. We're on a trend higher. We're seeing Bitcoin hit 65K today. What's going on, and is this all about rates?
I think it's about rates. It's about realizing that we're at the beginning of a long rate cycle, and Bitcoin has gone from, I guess, a mood of being kind of predetermined or feeling about being cautious about upcoming news to feeling more confident. So the Bitcoin price action since the assertive 50 basis point cut by the Fed, continues today with news of stimulus in China and other good economic news, and we think that it'll continue. Our Bitcoin trend indicator is pointing into an uptrend position, which is the first time in quite a long time. Actually, more impressively and more kind of affirmingly for us is the breadth of the rally. Our CoinDesk 20 index, which measures the performance of top 20 tokens, actually outperformed Bitcoin in the days since the Fed announcement by about 4%. So we had been seeing Bitcoin lead rallies out and altcoins come and try to kind of catch up. This time we're seeing the altcoins come out and kind of lead the way. So it's both affirming in terms both in terms of breadth and in terms of duration.
Yeah, talk a little bit more about what you're seeing in the data that you track, because for a while there was uncertainty about sort of how Bitcoin was going to track what's going on in the economy, or what sort of fundamentals were moving the crypto market. It seems like we're moving back to standard, that rate cuts are good for crypto, that the macro picture right now seems good for crypto. Is that what you're seeing in the data in that CoinDesk Indices is watching?
For sure. We like to think of Bitcoin as being a very singular, idiosyncratic or individual macro asset that reacts to expectations for future real rates. So that's going to be future rate expectations and future inflation expectations. Right now, as we enter an easing cycle, again, zooming out into the medium term, if we think that nominal rates are going to go down and inflation's not going to go down at the same velocity, then real rates are going to decrease over time. Bitcoin loves that. I think the rest of the market, which was really looking for Bitcoin to feel more confident before it kind of sprang back to life, not only Ether and Solana, but some of the smaller names like Aptos and Render and Hedera that make up constituents of our flagship CoinDesk 20 index, they I think immediately, as soon as the cut happened, started to feel as if, okay, now we're in this new territory, in this new regime. So at least that's how things are behaving, and it's been for a solid week now. So without any other particular, catalysts with respect to the election or regulatory changes or changes around the world, it just seems like the mood's kind of lifted a little bit now that we're in this kind of new easing cycle. So we hope that it'll continue. We're also into autumn, which is typically a season when we sort of shake off the sand and get back to from the beach and then get back to work. So this may be just that kind of time too, when investors get back and start to deploy capital into the entire digital asset class.
My team was just at Future Proof 2024 in LA. A lot of investment advisors were sort of tepid on crypto still. What's going to move the needle there? If it's not the ETFs themselves launching, is there something that you think people are waiting to see, or something that you think will get them excited to move them into this next adoption phase?
I heard that was a great event. I'm in Hong Kong right now, and I was at Token 2049 last week in Singapore, and the same kind of questions were coming up. Look, we have a very strong view on this topic. The institutional community has been looking at Bitcoin in particular for a long time, and at least $60 billion worth of interest has been expressed in Bitcoin ETFs. I think to a certain extent, I think we need more derivatives on Bitcoin, but other than that, there's enough market structure and availability that problem kind of has been solved. The next problem is going to be, well, do people who spend 2 to 5%, which is kind of the allocations that are talked about, if you're spending 2 to 5% of your time on this asset class, are you really going to learn the difference between Solana and Ethereum and Cardano and other layer ones and what Chainlink does and what Hedera does? You probably aren't. So our very strong view is that institutional adoption and better diversification benefits and all kinds of other classic investment benefits will be best served by an index. So we're pushing in that direction. I think in other parts of the world that will start to, kind of come to fruition in things like structured products or index derivatives. In the United States, we'll have to find ways that institutions can sort of benchmark themselves and allocate to the asset class all at once. They're not going to be token pickers. They're going to be index buyers. So to the extent that regulation and market structure can support those things, we think that that's the biggest accelerant to institutional adoption.
Real quick, if I can ask, we've seen that allocation size that you talked about, that 2 to 5%, sort of grow to that point. At one point, we were hearing 1 to 3%. Do you see that trend continuing as people got more comfortable? I mean, where do you see us sort of falling, if I can ask you to predict that far? How high that allocation?
It's a great question, and some of that's just based on price appreciation right there, right? 1 to 2% can become 2 to 5%. When I think about big institutions that like a pension fund, ultimately, when you think about digital assets entering a strategic asset allocation, it's going to be small. It's going to be 1 to 2%, maybe a little bit more, because there's a lot going on in those portfolios. There's already a lot of alternatives risks. When we think about the advisor community that's advising retail, mass affluent, wealth, Especially with interest rates starting to come down and yield a little bit harder to find, the 1 to 2% becoming 2 to 5% feels not so much like a giant leap. Also, 1 to 2 became 2 to 5 kind of with the presence of Bitcoin ETFs and how well they've worked. The market structures worked really well. The adoptions worked well. We've married two different, kind of otherwise unrelated market structures where you can have Bitcoin delivered into trust to support ETFs, and that's worked magically well. And certainly, as a platform, can support many other tokens. So I think the safety and the fact that Bitcoin's a year older, Ether's a year older, the networks are stronger, means that I think and that there's a lot more education going on, means that advisors can actually reach a bit deeper. The other thing to keep in mind is that volatility is coming down in this asset class, right? So Bitcoin at its kind of least volatile times is only about twice as volatile as equities, or is as volatile as equities are when they're turbulent. Bitcoin's not a 100 vol asset anymore. It's more like a 50 vol asset. So when you think about how much risk you're deploying, 1 to 2% going to 2 to 5%, it doesn't seem like such a big jump.
Okay, that's all we have for Crypto World today. We'll be back here again tomorrow. We'll see you then.